What's up everyone? I hope you're all doing fantastic today. Welcome back to the channel. It's great to have you here with us. Today we're diving into how you can invest $1,000 for maximum returns in 2025. This is going to be an exciting journey. Whether you've got a little extra cash from a tax return, a side hustle, or you're just starting to dip your toes into the world of investing, this video is for you. We're here to help you make the most of your hard-earned money. We'll be breaking down some key strategies that can help you make your money work harder for you, even if you're starting with a smaller amount. These tips are designed to be practical and easy to follow. Remember, you don't need to be a millionaire to start investing. Every little bit counts, and the earlier you begin, the more time your money has to grow. It's all about taking that first step. If you're new here, make sure to subscribe to my channel and turn on notifications so you don't miss any of our future videos. We have a lot of exciting content planned just for you. We've got a ton of valuable content coming your way on personal finance, investing, and building wealth. So, let's get started and make the most of your financial journey together. Let's be real for a second, guys. Simply saving your money isn't enough anymore. The days of relying solely on a savings account to secure your financial future are long gone. With inflation eating away at your purchasing power, that $1,000 sitting in a savings account is actually losing value over time. Prices are rising, and your money isn't keeping up. Investing, on the other hand, is like planting a seed. You nurture it, give it time, and watch it grow into something much bigger. It's about putting your money to work so it can generate more money for you. That's the magic of compound growth. Your investments grow, and the returns on those investments grow too. Think of it this way. If you invest that $1,000 and it earns an average annual return of, let's say, 7% in 10 years, you'll have almost doubled your money without lifting a finger. That's the beauty of letting your money work for you. That's the power of compound interest working its magic. Time is your ally when it comes to investing. Investing is your ticket to building long-term wealth, achieving your financial goals, whether it's buying a house, retiring early, or traveling the world. The possibilities are endless. Remember, investing isn't just for the wealthy, it's for anyone who wants to take control of their financial future. It's about making smart choices today for a better tomorrow. It's about building a solid foundation for yourself and your family so you can live life on your terms. Start investing today and watch your future flourish. Now, when it comes to investing, you never want to put all your eggs in one basket. That's where diversification comes in. Imagine you invest your entire $1,000 into a single stock and that company ends up tanking. Ouch, right? That's a recipe for disaster. Diversification is about spreading your investments across different asset classes like stocks, bonds, real estate, and even things like gold or cryptocurrency. Think of it like building a well-rounded investment portfolio. By diversifying, you're essentially mitigating your risk. If one investment takes a hit, the others can help cushion the blow. Remember, a well-diversified portfolio should align with your risk tolerance and investment goals. It's not a one-size-fits-all approach. There are tons of resources available online, or you can talk to a financial advisor to figure out what asset allocation works best for you. Chapter 3: The Power of Consistency, Dollar Cost Averaging. Let's face it, the stock market can be a roller coaster, full of unpredictable twists and turns. It has its ups and downs, and trying to time the market perfectly is nearly impossible, even for seasoned investors. The constant fluctuations can be nerve-wracking. That's where dollar cost averaging comes in as your secret weapon, providing a sense of stability in a volatile environment. Dollar cost averaging is a simple yet incredibly effective strategy where you invest a fixed amount of money at regular intervals, say $50 every week, or even smaller amounts if that suits your budget, or $200 every month. The key is consistency, regardless of what the market is doing. This approach helps you avoid the pitfalls of trying to predict market movements. So when the market dips and prices are lower, you're buying more shares, taking advantage of the lower prices. When the market is soaring, you're buying fewer shares, but still investing consistently. Over time, this strategy can help you average out your purchase price and potentially reduce your risk. Remember, consistency is key. It's about playing the long game. By staying disciplined and sticking to your DCA plan, you're essentially taking the emotion out of investing and letting time work its magic. This disciplined approach can lead to more stable and potentially rewarding outcomes. Chapter 4. Keep it simple. Index funds and ETFs. Now you might be wondering, where do I even begin investing my $1,000? Well, for beginners, I always recommend starting with index funds or ETFs, exchange-traded funds. These are like baskets of stocks that track a specific market index, such as the S&P 500 or the NASDAQ 100. Think of them as buying a tiny piece of hundreds of different companies with just one investment. They're incredibly diversified, which, as we discussed earlier, is crucial for managing risk. Plus, they typically have very low fees compared to actively managed mutual funds. The beauty of index funds and ETFs is that they're designed for long-term growth. You don't need to be a stock-picking expert or spend hours researching individual companies. Just set it and forget it. Chapter 5. Never stop learning. The world of investing is constantly evolving, so it's crucial to stay curious and never stop learning. Don't be afraid to dive into books, blogs, podcasts, or even take some online courses to expand your knowledge. The more you know, the better equipped you'll be to make informed investment decisions. Remember, investing isn't a one-time thing, it's a lifelong journey. As you gain more experience and your financial situation changes, your investment strategy should adapt accordingly. Keep track of your portfolio's performance, rebalance it periodically, and stay informed about market trends. Most importantly, don't be afraid to ask for help or seek guidance from a financial advisor if you need it. There's no shame in getting professional advice, especially when it comes to something as important as your financial future. Thanks for watching. Give it a thumbs up and share it with your friends. Don't forget to subscribe for more tips on investing.